Welcome to Real Estate 360 Live with Ryan Sloper, the trusted name in real estate radio. Now, here's Ryan Sloper.
Welcome, everyone, to Real Estate 360 Live. I'm your host, Ryan Sloper. For those of you not familiar with our program, my guest and I will cover every angle of real estate under the sun, from interest rates to the economy, to what's happening with the Federal Reserve, to the government shutdown, any of the economic issues, and even political issues that can actually have implications and consequences to the real estate market is what we'll discuss here on the show. I've been receiving a lot of questions, obviously, lately in regards to, what's taking place with the government shutdown and how that's affecting real estate transactions. And is there anything that they can do to keep their loan moving forward? Should they wait until the end of this before they start looking at houses again? We're going to try to answer some of those questions today. You can obviously ask any questions that you have on the website at realestate360live.com, or we have an 800 number, which is 877-245-2030, and that's the phone number that you can call with any real estate-related question you have. If we can't, if we don't answer your question on today's show, we'd be glad to answer it on one of our next upcoming shows. And this is really a show, like I said, to kind of give you the information that's out there, whether it be the newspaper, whether it be TV. We try to break it down on a more elementary level and help you guys understand how it's actually going to affect you. I mean, I think a lot of times it's easy to listen to what everybody says, the talking heads on TV. They give you their side, which is typically a biased side, and we try to break it down and help you guys understand how that could potentially affect you on the ground level. Joining me on our panel, as he does every week, is Louis Camerosano. Louis is a former school teacher, a former attorney, and a former general manager of a major real estate portal, and he's often cited in the media as one of the leading real estate industry experts. He's been cited in Wall Street Journal, Forbes, CNN Money, Fox Business, MSN, and numerous others. Louis, how are you doing today?
I'm doing grand, Ryan. How are you?
Oh, I'm doing just another day in paradise, obviously. We've got lots to discuss today. As we had talked last week, we knew that we have basically the debt ceiling to deal with, the government shutdown to deal with, and much of nothing has gotten accomplished over the last week. We now have the looming date of October the 17th, where we have to make certain payments on our debt, that if that does not happen, there could be some big-time ramifications. You obviously had written a blog post on your blog, Smoggle.com, about Treasury Secretary Lew and what he had said, was it yesterday, I believe, right?
And he's been saying the same thing for the last week.
Yeah, but what was interesting is, I believe, when he had said the fact that basically it's an all-or-nothing system where the Treasury can either make payments to everybody or nobody, right? And essentially that this is going to start to affect basically people that are on Social Security. They're not going to be receiving payments. And then late yesterday, I believe, was when Obama and Boehner, they met again for some further discussions as to what they plan on doing. All this kind of leads us back to where we've been talking for years, that inevitably they cannot stop this nonsense. They cannot stop, the track from heading off the cliff. They can just keep extending and adding a few more tracks, right? And the way that they do that is continue to extend the debt limit. They continue to print more money, spend more money. Inevitably, this is exactly the same road that we've been down numerous times before. Nothing is really going to change. I want to kind of get your thoughts on what's transpired over the last week and actually where you see things going from here.
Well, Ryan, you hit the nail on the head again. The two issues that I've been harping a lot lately on Smoggle.com is the combination of dysfunctional fiscal policy and dysfunctional monetary policy. And by dysfunctional fiscal policy, we see it on display in Congress, where they don't pass budgets, they spend more than they bring in, they do deficit spending, and then they have to raise the debt ceiling. And then after they spend all the money, they decide, well, wait a minute, we shouldn't have spent it, so let's try not to raise the debt ceiling, and let's have a big debate over it. And when that debate is over, we'll raise the debt ceiling anyway. So basically, it just signals a very dysfunctional body where they spend too much, then they kind of feel bad about it, and they pretend that they're going to not do it again, and because they're not going to raise the debt ceiling, they cause a big stir, and then eventually they fix it. And what I mean by monetary policy is the Fed is what creates monetary policy, and they do that by controlling interest rates and the money supply, and they've done a spectacular job of tossing a lot of money into the system by their quantitative easing program of $85 billion a month they purchase of mortgage-backed securities and U.S. Treasuries with money printed out of thin air. So you've got both of them spending and spending and spending, and they both pretend that they don't want to do it anymore. As we mentioned on the fiscal side, the Congress says, we're not going to raise the debt ceiling. We're going to start to trim spending, and they never do it. And then on the monetary side with the Fed, they start with this taper talk nonsense that we're going to taper, we're going to stop spending all this money. And they even the taper talk is nonsense, Ryan, because they're not saying they're going to stop spending the money or printing the money. They just say they're going to print less of it, maybe one day, and they've been talking about that for months. So that's really where we are. And so if you look at the entire situation right now that we have in the context of fiscal and monetary policy dysfunctionality, you know what the result is going to be. The result is going to be that they're not going to default. They're going to pay their bills, but they're also going to pay everyone else. And they're going to spend more money, and the solution is always next week, next year, next decade is when we will finally curtail the spending. That's what the result will be in Congress. We're going to cut spending. And remember last time, Ryan, in 2011, what did they end up doing? They said they were going to cut spending. They couldn't agree on cutting spending, so they had to put this automatic sequester in place, which really didn't cut spending. It just slowed the rate of spending.
Exactly.
So we are on this route, and the further down you go, the further you have to go of spending money. And then, of course, the other thing that we didn't mention yet is the nomination by President Obama of Janet Yellen. Now, Janet Yellen fits the mold perfectly because I mentioned last week we had Greenspan before Bernanke, and Greenspan basically had the low interest rate policy. Then Bernanke, his successor, had the no interest rate policy. And now you got Janet Yellen, who's a proponent of negative interest rates, which basically would mean that, you pay the bank to hold your money. So the monetary policy has gone from discouraging savings to punishing savings because the mentality is that spending money is good for the economy. Be like us. We print money, and the reason we print it is so you can spend it, not so you can save and invest it. And, of course, Congress needs the money, too, because they like to spend money to get votes. So that's the environment we're in right now. And so when you hear Jack Lew say, we can't prioritize spending, that's because he doesn't want to prioritize spending. He wants to spend every last nickel of it, and that's exactly what they do on the local level, Ryan. In your area, when the school budget comes up, they don't threaten to cut bureaucrats, tax collectors, meter maids. No, they threaten to cut off the fire and the police and the teachers if you don't pass the entire budget. So that's just how politicians are, and that's what's going to happen. And I just don't understand why we fall for it, because they've tried to scare us into, if we don't pay for every last bit of wasteful government spending, the world's going to end, because if we don't pay for all of that, we can't pay our debt and our Social Security and Medicaid. And that's patently not true.
Yeah, well, and then I believe the talks said, from both sides yesterday between the president and the Republicans, in the proposed 6-week increased debt limit, which would get them to November the 22nd. I find a little bit of irony in that date because that's like past the elections, right? Yeah. So they can hold this off until after the election, and which point they can argue back and forth about who's right on what side of the debt, the debt ceiling and all the other political issues that they care to argue. But, more or less, we've talked about this for how long, Louis? It's just every month there's going to be something different, right? So we said from before it was the taper talk, which then turned into the government shutdown, which is now going to turn into an increased debt limit pushing into November, which we have the elections, and then after we get to that point, they'll figure out and just say, you know what, okay, we're going to increase our budget.
And the reason the Republicans did this is they knew that if they get through the election cycle having not caused any problems, they have a better chance of winning.
Yep.
Now, Ryan, let me ask you let's go to real estate now.
Sure.
Because in real estate, we have probably more than any other industry, significant headwinds, if not a shutdown, in the entire real estate process.
Right.
And we can go through those, but my question for you is, at some point, if this goes on for a while, that also gives the Fed and Congress more excuse to spend more money to re-stimulate the economy because of the harm that they caused by the shutdown.
I was thinking the same thing. Essentially, like we had talked about, the Fed was talking taper, but all the stars are aligning now. Again, they want to nominate Janet Yellen, as you said, who loves Bernanke's policy. She favors his policy as far as buying mortgage-backed securities and all that. She's not going to change that. If anything, I think that they could actually increase it, and they can actually use the excuse of, look what happened with the whole government shutdown. It kind of it threw real estate off track when, basically 20% of our economy is real estate.
Undid all their good work.
Right. Wait till we see the numbers at the end of this year where real estate kind of fell off the map.
And you can't see the numbers because the government is shut down, so they're not produced.
And then when they do come back, they'll be skewed because it was a government shutdown, and we can't take that into consideration. But we
have to wait to see more data before we make more decisions not to taper.
Absolutely. So now we're, like I said, nothing's going to happen through the end of this year. So we know, she's going to be appointed beginning of next year, and that's when we'll start trying to figure out what her plans are. But I could see that, yes, they're going to have to, prop up the market even more because this government shutdown is putting a damper on all businesses, not just real estate.
Oh, it flows from that. But real estate in and of itself, though, is actually going into a shutdown right now because you cannot do loan origination. You know this because the IRS and Social Security Administration are closed. You can't verify income. And then the mortgage approvals from FHA, they don't even have, I think they have 1 out of 10 people working there. And then in rural areas, you got the Department of Agriculture, and they're shut down for approving new loans. So,
well, it's somewhat true, Louis, but what's actually happened over the last week or so is many of the lenders and banks have actually started waiving 4506 tax transcript requirements, okay? And I think that this was an industry decision because they all said, this is cash flows from businesses. They understand if they don't do loans for 30 to 45 to 60 days, they might shut down altogether.
Yeah, but they might also, if this continues and people catch on that they don't need to verify their income, you might have a lot of defaults coming down the pipeline, too, if you make those types of loans.
Well, and I think what's happening is and obviously I've gotten different answers from different companies, but some are doing, just up to the conforming limits. They won't do them on jumbo loans. You know what I mean? I think they have exceptions to the rule and things of that nature, but
well, jumbo loans, Ryan, though, aren't they kind of, in some respect, what's driving the large markets, like the ones that have the big price appreciation, like San Francisco, New York, Boston?
Absolutely. Yeah, and you have to also remember that these are like the big lenders. Sometimes the local banks, they have a different set of guidelines, and this is the biggest advice that I can give anybody right now is that don't just assume that, the rules are the same for everyone.
Mm-hmm.
You know what I mean? Because I think that what happens, once again, we start reading all this nonsense that's on the computer or the TV or the newspaper, and it's hard to decipher, what's accurate and what's not. We're fielding phone calls from people all day that says, hey, well, I should probably not even look to write a contract or anything until after the shutdown's over. Well, that's not necessarily the case. It's actually, to me, a better time because when people are trying to sell their house, they might be more apt to take a lower offer right now because they're so uncertain of what's going on. That's just my take on it. But I think that you can actually negotiate a better deal, and you need to be working with lenders that do have the ability and capacity to close loans right now. Granted, if you're trying to get a USDA loan, you're not getting one of those right now because they're completely shut down until this is over. So you're not going to get a conditional loan approval for a USDA loan until after it's over. But conventional VA and FHA. Now, there's still going to be some slowdown, as far as the processing of your loan because it's going to be slower than it normally would because they're not at full capacity. But it can be done. I've seen numerous lenders, pretty much all of them now, have all decided that they're going to take that same path of accepting tax returns over the 4506 tax transcripts. Now, that's kind of on a limited basis, and I think that it's still, if somebody's on the fence about income, like it's really close, Louis, I guarantee you they're not going to let that loan go through, right?
Of course, because then they'd be breaching their fiduciary duty to whoever's loaning them the money.
I think if it's a slam dunk loan, if it looks like, hey, these ratios are not even close, those are the ones that are going to be put through relatively easy. One of the lenders that I work with, they basically had said, we're waiving this, but it's still subject to underwriter, sign off, which would essentially mean that they still have the right to approve or deny that loan or make it contingent upon those transcripts. Which,
right.
And as I stated, Louis, before, just imagine, okay, so let's just say we get this settled, in the next 3 or 4 days. So then everybody goes back to work. Government's slow moving to begin with, right?
To get it started up again, it's going to take.
Yeah, just to get it started, where it's going to push you back 2 weeks, and then they're going to have to be working from the backlog of everything that's been building for the last 2-3 weeks, and that could push us out another 60, 90 days. So yeah, this is really messing with the ebbs and flows of this real estate market, where we seem to have been moving in the right direction, but I can see now that the reports over the next 3, 4, 5, 6 months are all going to be blaming the shutdown.
Oh, absolutely. Not that the thing was coming down beforehand. And you raised another very interesting point, Ryan. The perception of people. You just spoke and said that don't listen to all the nonsense. And it may be a good time to go and find out if you do qualify, if you continue to buy a house. That's great advice for the few hundred people who listen to us. But for the millions of people who hear about this, it takes them out of the market. And therefore, the entire market shuts down, even though, like you say, there's opportunities and you can go ahead and get your mortgage, get your loan. That's not going to happen on a wide scale. So it does open an opportunity for people who are paying attention. But paying attention is you have to be in the right sources. And if they're not listening to a show like ours, there's probably precious few areas they're going to find this information out unless they proactively seek it and go and speak to a mortgage professional or a real estate agent. And many of them are probably already thrown in the towel themselves because they haven't really themselves gone out and tried to figure out how they get around this shutdown.
Yeah, and, I think that's kind of people's just natural reactions to things like this. I mean, as an overall society, we're programmed to be negative. And with all the information that's out there, it is completely negative. I've never seen anybody flip a story to where this could actually be a positive. I'm not saying that it is a positive because I don't actually believe that anything that they're doing is positive. But I do see a lot of opportunity when there is these negative things taking place with the shutdown and whatnot. Now, you still have to be in a position to capitalize on that. I realize that. But for somebody not to acknowledge that these things do exist, is wrong to me. They only want to say, show one side of the story here. And moving forward, I honestly think that we're going to be right back to where we were, as you had mentioned, Louis. They're just fueling the Fed's fire even more, giving them more ammunition to come in and reload their gun, right?
Well, they want to be able to say that this shutdown, everything shut down, it came to a standstill, we had done good work, we had done QE, it was working, and now look what happened. So guess what we're going to have to do? We can't taper it, of course not. We're going to have to restart QE, and the only way it's going to work is we're going to have to restart it at a higher level because too much damage has been done.
Right, and how many times has the Fed said, we can only do so much, and Congress needs to get their budget in line and things like that. But now that we've had the shutdown, they're going to turn around and go back to the Fed and say, hey, well, look, we got thrown off the tracks with this whole shutdown thing, and things are going downhill again. We need your help. What do you guys have left to do? Well,
yeah, they might have to do some emergency stimulus.
Absolutely. I mean, it's coming. I mean, we've seen this before, and that's why I said a couple of shows ago, Liz, remember when I told you, I mean, this could drag out for another 3-4 years. I mean, every time it looks like we're on the brink of just utter collapse, right? There's always something that comes in and just stalls that out, and I think that we already see the signs of it. It went from Fed taper to government shutdown to now probably a temporary increase in the debt ceilings, which gets us through the elections, which gets us to Janet Yellen being elected next year. which is going to continue the policies of Bernanke. I mean, this is the same old song and dance.
When you see Yellen, if you're objective, you basically say to yourself, they are accelerating the madness because here's a woman who is beyond Bernanke, more dovish, wants to spend more money, but they always have a way of tempering the madness. They use the word taper, which means we're really concerned about all the money we're spending. Well, we're not really. We'll come up with a reason not to taper. They come up with not raising the debt ceiling to make it look like they really are concerned about spending. When they're not, they'll raise it and they'll spend more. And with Yellen, you see a lot of the commentary is Yellen is really concerned about inflation. Yeah, like someone who's playing with matches is concerned about fire. Sure.
Right.
But the thing is, she is not saying I'm concerned about inflation. Her statements are inflation is too low. I don't heard anyone say that. Well, I have heard many Keynesians say, but it doesn't make any sense to say inflation is too low and monetary policy needs to be, quote, more accommodative. Another great word, which means we need to spend more money that we don't have. We need to print more money and pour it into the system, punish savers, and go to negative interest rates. But with a straight face, she has her PR saying she's concerned about inflation. Well, of course, right. I'm concerned about getting shot too. But that doesn't make any sense when you talk about what you're concerned. Of course, you're concerned about inflation, but her policies are designed to create inflation.
Yeah, and you know, from where they make all their decisions, from the information that's given. They take Bureau of Labor Statistics and all these other different places that provide, you know, statistical data to them, and then they make a decision on what they to do with their policies. My question is, don't you think that, you know, those things can be skewed into whatever direction the Fed wants to go? You know what I mean? They don't do any, like, everyday, just simple testing, which is like, okay, what was gas prices last year? Where are they today? What are food prices? I mean, the things that actually matter. I mean, inflation's too low. That's a bunch of crap.
Well, they use the CPI, and they're comfortable with it. And when they're not comfortable with the result it gets, they change what's included, what products and services are included in the CPI.
But that's my point. Like the CPI is a bunch of crap because the things that they factor out are probably, you know, some of the people's biggest expenses. So you're not even taking real life things into consideration here. The only thing that they know how to do.
Well, people believe it though. They said there is no inflation.
Right, but the Fed is merely there to basically to help along big business and the government. That's it. They're not here to help everyday people.
They're really there to help themselves.
They're here to help.
And the shareholders of the Fed are the largest banks.
And they're the largest bank that essentially has an infinite bankroll at this point, right? And I've been thinking about this a lot. People keep asking me, do you actually think that this shutdown can go through? And I said 100% not. I don't think it can. It's impossible. It's impossible for them not to come to an agreement. They want to scare the crap out of people, which is what they've done. They've done that. And now when people come crying back and they're like, you know, oh my gosh, I'm not going to get my paychecks and their life is over as we know it. And then what happens? Oh, now all of a sudden come to the conclusion that we're going to raise the debt limit. We want to make sure everybody gets paid, and we'll drag this out anotr 2 months.
Yeah. Well, look at JPMorgan. They just paid a $9 billion fine. Now, how can they afford a $9 billion in legal fees?
Because they're making more.
Right. And where does that money go? A lot of it goes to fines, into the government's SEC. It goes to government. It goes to lawyers. It's amazing how much money they generate around banking.
Absolutely.
$9 billion just in legal fees. They took a charge in the quarter for that. JPMorgan. It was announced this morning.
Yeah.
What company has $9 billion to pay lawyers?
They do, apparently. And, you know, the funny thing was about that, they took that loss, and a lot of the stock shareholders were actually happy with the results of the quarter.
Because if you strip out the $9 billion, they would have made $11 billion.
Yep, exactly. So
I say if you strip out the $9 billion, you would have. It's just inconceivable to me that the way they operate, they have to pay $9 billion to lawyers.
I know. It is to me, too. I mean, a lot of the numbers that we talk about, Lewis, are inconceivable. You know what I mean? I mean, we're talking about $85 billion of what the Fed's purchasing
a month. And tapering would mean they'd only waste or spend or print $75 billion a month.
And like we had said, so let's say Yellen gets the chair post, which she will, because there's no way that they're going to put anybody in there that's that's hawkish on this and is going to pull back.
No.
I can guarantee you that. That's not going to happen. And don't think that Obama's economic advisors have not told him, we have to keep this gravy train going or else you're done. You're done. I mean, we've already seen what the talk of tapering has done to mortgage interest rates. So to reverse that and basically now say, hey, Yellen, we negative interest rates and maybe the possibility for more mortgage-backed security purchases to try to drive interest rates back down to 3% again to maybe get this thing moving uphill. You know what I mean? That's a real possibility. Now,
especially, right, because if the economy falls kind of flat, Obama will be calling his favors into Yellen and say, hey, you're a free woman. You do whatever you want now. You're in charge. It's January. You don't have to continue this taper stuff. In fact, you want to make your mark in the world? Crank it up.
Exactly. And how would Wall Street react to that?
I'd go nuts for that.
They would go nuts because they know, guess what? Wow, we've got another Bernanke on our hands.
Look at yesterday. The stock market went up $350 because there was a hint now, they might raise the debt ceiling.
It's unbelievable, like, how the markets work now. I mean, when we used to just digest normal economic news and things like that, you could actually say, the stock market's going to do this and mortgage rates are going to do this. Yesterday, it was the release of jobless claims, right? And jobless claims came in at 374,000 versus the estimated 310,000. But since half of the jump was due to the government shutdown and the other half was due to California's computer glitches, which caused them to underreport the last few readings. Isn't it funny how that happens, Louis? You know what I mean? Just mysteriously that happens. So on the surface, this was a myth. So technically, mortgage interest rates should have got better yesterday. But since it was because of the government shutdown, you know what? Let's let the stock market rally. And that's exactly what happened. Mortgage-backed securities got worse yesterday. Interest rates rose.
Well, they can't taper if there's 370,000 initial jobless claims.
No, there's no
That's
way.
good news, right?
Right.
That they're going to continue to print money. That's good news.
I mean, everything is just so revolved around, basically the inability of anybody to balance budgets, the inability for somebody to say that, you know what, we can't operate the United States as a normal business would. So our only option is to basically continue this nonsense.
Right, but that would crush. You're so right, Ryan. It's counterintuitive. It's not counter. It's countersense that if somehow the Fed said, you know what, it's artificial, it's inflationary, we're not going to print money, and the Congress said we're going to do a balanced budget, the markets would crater. They're like, are you kidding me? Right. That's not how these things work. They work by you keep pumping money into the system and spending money you don't have so we can drive stock prices up.
Well, and
that has to end. It can't continue.
When you hear people like Richard Branson, I was watching a video on him early this morning or late last night, basically where they were asking him about, how would this affect his business? And, he's over there in Britain, and basically he's saying, hey, everybody give Obamacare a chance, give it a chance. And also, the global implications of them not, paying their bills is ridiculous. And that's ultimately why I'm not saying that I know, but I believe that there's absolutely no way that we would not pay our bills, that we would not come to some sort of solution before the 17th or whatever date they want to put on this thing, because they will just turn it around. And even if I felt like even if we did default, Louis, like let's say we didn't pay that date, they'll say, oh, no, we're going to pay. We were just in the middle of getting this worked out.
The check is in the mail.
Right. Your check's in the mail. Don't worry about it. You can cash it next week. Everything is so intertwined with our country that, everything is so dependent, meaning like the dollar is tied to oil and it's the reserve currency and all those things, that it would completely shut down the world to me if we defaulted, which is why in order to remain that superpower, we can't let that happen, right? I mean,
because if you had a default in a bond, you would think, you never know, you would think that the markets would react along the following lines. The United States is no longer a rock-solid place to put your money because look what they went and did. They defaulted and they didn't pay our debt, and they might do it again. So from now on, we're going to be more cautious about dollars. Interest rates would have to go higher, and sensible people would find alternative places to park their money. It could be in another currency. It could be in gold and silver. Now, you would think that would have already happened, but it hasn't.
Right.
So it's even possible, in a perverse way, that in an event of default, people rush to buy treasuries. Get a little hair of the dog, I suppose, to make them feel better, because it seems to be almost a de facto safe haven. Even if well, look at 2008, when the 2008 crisis hit, people rushed to the safety of treasuries. They sold off gold and silver.
Right. It seems like the U.S. government is the only one that's immune to paying higher interest rates. As somebody had brought up a great example yesterday, like let's say, Louis, you had a credit card, right? You had a $5,000 limit on it, and you got your bill this month, and you said, crap, I don't have the money to pay this. You call up your creditor and say, hey,
put $2,000 on.
I can't make the payment this month, but could you extend my credit limit from $5,000 to $6,000 and just make my payment with that, right? And
Right.
you're going to say, no. And as a matter of fact, we're probably just going to close your account out, right? And if they don't, and if you miss that payment, your interest rate would go from 10% to 30% because you've now
Right.
defaulted on the card. So,
but instead, the credit card company says, sure, you want another $5?
Yep, exactly.
And you want it at a lower rate than you're already paying?
So the irony with the U.S. government is that, we're basically racking up more and more debt. We somehow keep an A rating. How? I mean, how is that?
Well, because if someone tries to downgrade them, the United States sues them.
Yeah, I know.
Isn't that what happens?
I'm saying using common sense here, though.
No,
right?
of course, but I'm not being facetious. What I'm saying is the rating agencies are reluctant to downgrade the United States because you saw what happened. Was it S&P or Moody's? One of the two did downgrade the United States at the end of the 2011 debt ceiling debacle, and afterwards the United States sued them not for the downgrade, but sued them for something else related to the ratings of mortgage-backed securities.
Yes, basically.
So they are reluctant to give an objective rating because think about it, they're sanctioned to give ratings by the U.S. government.
Right. Yep.
So, they know they know that they can have their charter removed. They know that they can be harassed. So it's very difficult to get an objective credit rating because there's no way that the United States or any government should have a sovereign debt rating of AAA if the current deficit is far in excess of their tax receipts and their unfunded liabilities are in amounts that can never be paid.
But if you're an investor, why would you ever want to buy a treasury bond if you knew exactly what you just said, right? Like, that the rating agencies are just going to say whatever they need to say because they don't want the government to mess with them. Everybody knows that they've got more debt and it's never going to be paid back. It can't be. I mean, how could you ever come out of the hole that we're in?
Well, it can be paid back, and this is the point I actually call, we used to have a gold standard, and then we went from the gold standard to the petrodollar because when Nixon took us off the gold standard in 1971, Ryan, the United States scrambled because they realized that some of even our partners like France and Switzerland weren't comfortable with us not redeeming their currencies for their dollars for gold. So we scrambled and we created these alliances with OPEC to make sure that international trade for oil required setting the price in dollars and collecting dollars. So that gave the United States currency some backing in a sense that you kind of had to have dollars.
Right.
But now it seems that the amount of money that we spent in excess petrodollars is far more than we spent in excess in gold back that we had that made people nervous, is the fact that we can, and we have shown the willingness to, print the difference. So basically, if you're a creditor, and this is why they won't default, because it's not that we don't have the money, because we can always print it up.
Right.
I mean, Greenspan said the threat of default, this wasn't in relation to this particular crisis. I don't know if you want to call it, I shouldn't call it a crisis. This particular circumstance, he said that treasuries are safe because the United States can always print up the difference. So I call the U.S. printing press the new gold standard. That in a way, if the United States decided it couldn't meet its obligations next week or October 17th, it would mean because they weren't willing to print up the money, which is the easiest thing they can do because it's just a digital exchange and the interest can be paid. So that is the United States gold standard, is the printing press. And if we move away from a reluctance to use that, then there's nothing backing the dollar.
Right.
Because people outside of the United States petrodollar are trading amongst themselves with alternative currencies. They're using the renminbi, they're using gold. You've got Brazil, you've got China, Iran, other countries that are trading amongst themselves not using dollars. But if you hold your reserves in dollars and then you don't get paid back because the U.S. says, well, we can't do it, like Jack Lews, our systems don't allow us to pay you, well, they'll just abandon that very quickly.
Exactly. Yeah. And I guess in the end, yes, somebody's always going to get paid because they can print more, and all it's really doing is pushing us closer to $1 being what $10 is right now, essentially.
Over the last 100 years, that's what a dollar has become. It's become, it's become worth a penny or two since 1913.
And then the longer they continue this, which is what we've been speaking about for months now, is, okay, well, when is this all going to come to a head? When is this, when is something bad going to happen from this? And obviously, there hasn't been anything yet that's taken it off course, and I'm going to stand firm that nothing's going to happen while Obama's in office. So you've got at least another 3+ years of exactly the same thing that we have right now.
And that's why people that are in the stock market and have been in the stock market since 2009, they love this. They're making money. And look, it's a good portion of your life, 5 years where you've managed to make these types of gains. You don't want that to stop.
Yeah,
absolutely. People, if they're smart, they can stay at it and tuck away a lot of money while everybody else sits around shaking their heads, getting poorer.
Yeah. And it was interesting because I believe there was a lot of press going on there. I don't know if have you heard about the trucker march that's supposed to come down 95 and go towards.
Well, that was today, and I didn't see anything on it this morning.
I haven't seen anything either, but there's been so many different talks of these things, and then you had the whole situation with a lot of military families of a military member that had died, their families getting their benefits, and then yesterday Obama went out and passed another bill of legislation to make sure that they got their payments immediately. So like I said, I think that their scare tactics have worked, as they always do. I think that people, I think people are over it, to be honest with you. I think even the people that have been furloughed, Lewis, are kind of understanding that, this is just a bunch of crap. We'll be back to work. They're going to pay.
Well, they're getting back pay, so what difference does it make to them?
They're out on the golf course, Lewis. I can tell you where they're at. I actually had played earlier this week, and they said that the course basically had one of their highest grossing months ever in just this past month. It was like $160,000 in green fees, and they were basically completely packed all day long with government furloughed workers. Right?
It's a farce. It really is a farce.
If we
were running out of money, those people would not be paid. In fact, they'd be fired.
Yes, absolutely. And unfortunately,
well, by the way, we are running out of money, but we're just not taking it seriously.
And we're not going to take it serious anytime soon.
Nope. Not until a foreign creditor decides we've had enough and decides to retaliate and dumps, like they do with the gold and silver, when they dump like large amounts in a half a second, and just decides they're getting rid of their treasuries and just throws them all on the market. Now that would be harmful to themselves,
right.
But that's the only thing that would change something like this, because the whole world has a vested interest, because everyone has dollars, so no one wants the dollar to collapse, and no one wants the system to collapse. And if you have to keep pushing out the day of reckoning, and you have to keep inflating the bubble by printing more money and spending more, that's what's going to happen.
Right. So many people have the question right now, okay, so this whole government shutdown, the debt ceiling, the Fed, Janet Yellen, all these things, so what does that actually mean for me and me trying to sell my house, and me trying to buy another, and mortgage interest rates? So if I'm looking to do something in the next 6 months, how is that going to affect me? And I'll give you what I think, and you can tell me what you think, Louis, but I think that it's going to be much of the same. I think that what we've seen for the last 6 months, I actually think it might get a little bit better, because I think that, as we discussed, I think that the Fed might be forced back into a position where they say that, the economy's struggling again, we got to get them back on the track. Let's try to force interest rates lower. If they're able to do that, then I think that we'll see an uptick in real estate come the beginning of next spring again. And I think it's going to be much of the same. So if you're considering selling your house, and you're worried about interest rates and things of that nature, I don't really think that anything is going to be different between now and next spring, other than maybe interest rates are a little bit better. Everybody's been prognosticating that interest rates are going to get worse, but I actually think that they're going to stay the same, if not get better now, based upon all of the events that have transpired over the last couple of weeks. Louis, what are your thoughts on that?
I agree with you, because in the blog post I just released on the 3 possible outcomes of the U.S. debt ceiling showdown, the first one involved Jack Lou's disaster scenario where we default and we don't pay our interest and we don't pay Social Security and Medicare. In that case, then all bets are off for the economy, all bets are off for real estate. All bets are also off in the second scenario, where basically we don't raise the debt ceiling. We kind of balance the budget and pay just what's up on the debt ceiling. That would also be a disaster for real estate and the economy, at least in the short term. But the third scenario, which is the most likely one that we've been talking about, is that they go ahead and they raise the debt ceiling. They go ahead and put everything back the way it was, but say, look, we had this damaging shutdown. We're going to have to get back at it. So I conclude that scenario holds hope for the continuation of the easy money policies that helped partially reflate the housing market. Some steam has been lost and already let out of the bubble, and it's going to take more than just the continuation of the QE policies that we had in place to get that market back up. And if that's the case, what's stopping them from increasing QE and using it as an excuse, as we've been saying, the government shutdown slowed the housing recovery that was well underway. So let's get back at it. So if you believe that scenario 3, where they avoid the default, raise the debt ceiling, then basically you're right. You can have a continuation or an attempt to continue this housing recovery through driving rates lower and hoping that the housing market reestablishes the recovery that it had. And it's going to take time, because you're in the slow season now, Ryan. You got October, November, December. Yep. It's going to slow down. January, people are going to be a little tepid, wondering how things stand. And Yellen's finally going to say, the last 3 or 4 months were worse than our projections, unanticipated slowdown in the economy caused by the government shutdown and the Washington nonsense. And, she's going to then probably push the button on more QE. And if that happens, it's not going to take effect right away. It's going to take a few months, because they're going to want to see how long it's going to be in place and what they say about it. And by this time next year, we might be back at the races again. It's not good for the economy. It's not good for the future of the country, but real estate might be back by this time next year if they go ahead and they try to do what they've always done, which is reflate what's been deflated through printing money in QE.
Yeah, which, everybody's, basically down on their luck right now. We could see this time next year, consumer confidence might be back up if interest rates would slide back down just even a little bit, even if it just stay the same, and we start to see, obviously everybody's back to work again. Well,
that's not going to be the case. It's not the QE won't help put people back to work. It'll just make it easier for people to buy houses that are in a position to buy houses.
No, I'm just saying that everybody will be back to work from this government shutdown.
Oh, that way. I thought you meant.
No, everybody will be back to work from the government shutdown. They'll have forgot all about this mess that they just came out of, because most people only remember what happened yesterday, not 3 or 4 or 5, 6 months ago. You know what I mean?
And certainly not 3 or 4 or 5, 6 years ago.
No, and that's what's the interesting part about all this, is that it's just we're going through the same cycle year after year after year after year after year, and at some point you would think something's got to give. But with the United States having the Fed there, and the Fed has basically, like I said, an infinite money supply. They can manipulate things as they see fit. But Janet Yellen's probably going to take the Fed chair spot come beginning of next year, and we know what her policies are. I mean, this is kind of a clear path right now for this to continue for at least.
They have an infinite credibility pool too, which is astonishing.
I know. I mean,
it's not just that they have the money, because you would think anybody who was just standing there cranking out money at $85 billion a month just because, you would start to question after 4 or 5 years that this isn't right.
Well, I would venture to say that the people that are actually that are backing the Fed, that it's all their money, they're probably they're the richest people throughout the world, right? And
correct.
And
they have nothing to gain by criticizing what's making them rich.
Exactly. It's not like they're just all the rich people in the United States. This is the world, right? And that's why, essentially, we always know that we're going to be in control. This is like the World Bank here. And as long as we can, manipulate and dictate where things are going, I don't think anything's going to change. But
don't fight the Fed is what they say, right?
Exactly. And Wall Street is completely 100% on board with everything the Fed does and says. And now we basically realize that we're going to get another, couple of years of the same policies, if not becoming even more lenient on interest rates.
He's got an excuse now. They were in taper mode. Everything was looking towards we were going to taper as the data came in. Now they can just ignore that the data was not as good as they thought it was going to be or pretended they thought it was going to be. They now know it's not going to be good. They'll find that out in the new year when the government opens and the statistics finally catch back up, and they'll see that there was also an impact from the government shutdown.
Absolutely. And
all bets are off. Back to QE and double it if you have to.
Right. And when in doubt, these reports can come out and they can, they can twist and turn them however they want. They can create distractions with Syria. They can have threat of government shutdown. They can have debt-ceiling issues. I mean, there's endless geopolitical issues with Syria, Absolutely.
with Iran. It's so funny, Ryan. Syria was occupying our thought. It was the most important issue of our time. We had to go and do something.
Where did that go?
Oh, I don't hear anything about Syria. Did he not gas these people? Wasn't there some worldwide humanitarian crisis that needed to be settled right away?
And for somebody that was so serious about moving forward with that, now for it basically to be backpage news, if news at all, I mean it's very.
Well, you know what? They didn't need that crisis is no longer needed. There's other ones now.
There's more to come, Louis.
Oh, absolutely. This one's good though. This one you've just extended it 6 weeks by having this negotiation period, so you're still on tenterhooks, even though you know how it's going to end. There's still the uncertainty. And therefore, you still need the direction that they're going to give, that the Fed is going to give, or what they're going to do with their spending policy. So what do you think is going to happen at the next meeting in the next, I think it's 2 weeks or 1 week, the next Fed meeting?
The next Fed meeting, they'll basically say, look, with the government shutdown and everything, we can't really take any of the information that we have because it's not going to be accurate. People are out of work. We think that, obviously we're going to hold off on tapering. There's no reason to taper. And we actually are still reserving the right that we can actually add to this if possible.
Right, which is a shame because they're on record as saying in September it was a close call. And they don't mean a close call. It was 11-1 or 9-1, I remember the number.
Right.
But it was a close call in many of their minds to say they weren't going to taper. So they knew that they can say we were so close to tapering, and then look what happened. Yep. We didn't get any data. We were expecting to get the data in October to confirm our suspicions that the economy was improving, and we didn't expect this government shutdown. And you know what? It's not a close call anymore. Can't taper.
Right, and with the upcoming elections in November, they're not going to really probably say anything out of character at the next meeting, I don't think, Louis. Just much of the same. And they'll just let things play out through the end of this year.
Well, then there's another meeting in December.
Well, yeah, there is, but I think that it's going to just continue to be much of the same all the way through the end of this year until Yellen takes office beginning of next.
Right, because it wouldn't be fair to Yellen, just in general progression of, when you change from one leader to the other, to establish a policy that maybe she's not comfortable with in the last meeting. Yep. So if the Fed was interested in tapering and truly was not just bluffing, they could wait till the next Fed meeting, which I think is in January, isn't it? Her first meeting, and she would have. In other words, it's her turn to say this is my new policy. Not Bernanke's parting shot was, hey guys, I did QE for 3.5 years. Now I'm stopping and I'm out the door.
Right.
You'd want to leave that to Janet Yellen to explain. The markets would rather hear. Because if Bernanke does it in December, which he's not going to do, then you're going to wait to hear what does Janet think about this in January.
Yep, absolutely.
So basically QE is probably off the table. They've always surprised us, but it's always on the other side, which is to do more than I expect. So I don't really expect them to. Right.
Well, if they do the 6-week increased debt limit to November 22nd, that's almost getting us to the end of the year. You know what I mean? So, and they'll probably not. They'll have something worked out in the 11th hour leading up to that. So I would imagine, it's just going to be much of the same. They're going to continue to say, well, the numbers still haven't shown us any reason why we should taper. We need to see, keep following the employment situation, and that'll get us to the beginning of next year, where then we'll see if she decides to take more aggressive action.
Right, because if the government solves its problems, that'll make the stock market go up, but that won't solve the underlying issues with unemployment, which is the Fed is supposedly looking at. So there's not going to be any improvement. In fact, that the numbers are going to get worse as a result of the government slowdown, because it's just not a positive short term on the economy. So even though the stock markets may be rallying at the end of the year because the Congress has come up with a solution that everybody likes, the Fed's going to say, well, that's nice, but there's damage done to the economy, so we can't do any tapering.
Yep. Yeah, it's definitely going to be interesting, Louis, to see how things play out. We'll keep our eyes on everything and our ears open. We're coming up on the end of the show, but I want to thank you again for coming on. I think that this information is useful to all of our listeners. And if our listeners do have any questions for you or I, if they're trying to get in touch with you, give them your website again and give them your contact information.
Oh, sure. You can go to Smallgold, SMAULGLD.com, Smallgold.com, and check out basically 2 or 3 times a week, we update the Smallgold.com website based on either current events or just general market trends, what the Fed is doing in real estate. And if you click on the About button, you can get my contact information, my email address. You can contact me at smallgold@gmail.com. Thanks, Ryan, for having me, and thanks, everyone, for listening.
Thanks, Louis. Appreciate it. Thank you guys for tuning in. If you do have any questions, concerns regarding anything we covered today, or any questions for an upcoming show things you'd like for us to address, we'd be glad to do that. You can reach out to us at realestate360live.com. There's an Ask a Question button on the right-hand side. That's realestate360live.com. We post all of our shows, our podcasts, on the website, so you can listen to them there. But like I said, we're here to help any real estate questions that you guys have. We want to answer them and help you make sense of what's actually going on. Thanks a lot, guys. Talk to you soon.